Thank you everyone for coming. We are excited to have a new topic for this monthly seminar. As a reminder, we do these seminars the second Wednesday of every month now. Different topic each month based on feedback from you guys as board members. So excited to see we have a decent turnout today, so I'm excited to see that. Those of you that don't know, I am Lee, I'm the COO, and I am our in-house designated education person. So I enjoy doing these and sharing what knowledge we can with everyone. With me in person here today, we have Chris.
Hi, everyone.
Wealth of knowledge as well, a few years in the industry. So between us, we have a lot of education and experience in the insurance realm, but we wanted to bring in the experts to talk to you guys about it tonight. Insurance is a super exciting topic that you're all going to be pumped about and learn a ton from, but it's something that's crucial to associations and stuff that you guys as board members need to know. So without further ado, I'll introduce Wendy Sherman from Marris Brown Insurance and Casey from Marris Brown. Sorry, I don't know your last name, Casey.
It's okay.
So I will kick it over to them. If you have any questions while we're going, feel free to shout them out. We have a few people from our team online as well, and Chris is also monitoring chats. So feel free to jump in with any questions. Turn it over to you guys.
Perfect. Thank you guys for coming this evening. We're here to discuss the insurance policies for condominiums and how it affects you as board members versus unit owners and what you guys should look out for on the policies as what you need, what's recommended, and how what is being affected in the market today for if you're eligible for certain insurances. Again, I'm Casey Yankee. This is Wendy Sherman. You'll see, let me just click this over. You'll see I added some agency contact information. So Amy Powell-Meyer is my coworker, and she would normally be here as well because she works a lot with KS Management. She is in a much deserved vacation in Greece. So happy to assist her while she is out, but just so you can have her contact information there in case you guys have any questions or follow-ups after the meeting. You can reach out to Amy, or there's additional contacts there as well. If Amy's not available, we can help you answer any questions.
And next year when we do the seminar, we're going to go to Greece with Amy.
Yeah,
so.
All of us are.
She went to Italy last year.
Yeah.
So
It might be somewhere different.
She's going to Germany at the end of the year, so she loves to travel.
Suggestions.
Yes. Right. Yeah, that would be nice. Okay, so let me just. So for condominium insurance, you will normally see what's called a business owner policy. That's going to be what type of coverage your association as a master has as their policy. So there's the business owner policy for the master insurance, and then the unit owners will have their individual HO6 policies in place. So we're kind of going to go through what each of those entail, starting with the master association policy. So that's going to cover property and liability. So to get into some property coverage, that's going to cover the structures. So all of the buildings at the association and the common elements. So it's going to cover signs, benches, lampposts, if you have a clubhouse, if there's a shed, an office, and then all the buildings that the actual units are in. So that's what we mean when we say property. So in the event of a loss, a fire, it goes down, you will have insurance to rebuild that building. So a couple things to look out for on your policies is how that building is covered. Typically, you will see what's called blanket coverage. It provides a very big limit normally. So instead of scheduling every building separately, it'll add that total up and give you one big blanket limit that you have available to you at time of loss. So if there's a fire in one building, you have that entire limit available to you. There's a total loss. Say every building goes down from a tornado, you will have the full limit available to be able to rebuild back to 100%. So just typical language you will see on a policy under property is blanket coverage. You will also see how it is valued. So typically you will want to see that it's guaranteed replacement cost or replacement cost. So that just means that they will the carrier will rebuild up to 100% of value, guaranteed. Sometimes you might see under special circumstances that they will be valued with actual cost value or actual cash value or ACV. This provides less coverage because they are going to take the replacement cost and depreciate it by how old it is. So just that normally doesn't happen unless there's a lot of issues going on or it's specifically requested, but just something to make note of that there are different ways to value your property. So as with Farm Bureau, we value everything at replacement cost at 100% replacement cost, agreed value. So some blanket coverage. So you might have where that doesn't happen, and some carriers will do 80% value, agreed, and say there's the total loss and you only have 80% of that building value available. You're going to have a gap of 20% that might be due, and it's called a co-insurance. It's a penalty. That's something to note because some carriers may do that. Farm Bureau does not. We do 100% replacement, but just something to look out for to make sure that you are fully replaced in the event of a loss.
And it's important with like anything, insurance is the same way, you get what you pay for. So
Exactly.
you pay a higher premium, but that will ensure that you have 100% coverage if something happens.
Yes.
You can get,
Do you do an appraisal of the property when you?
Yeah. So we,
So whatever that blanket coverage is, you expect that all these buildings will be X amount.
yeah. So we do inspections. So we'll look at them in person. And then also we have a cost estimator that we use that we take, we look at your building, take all of it. Is it a brick exterior? Is it a vinyl exterior? Down to that, and build it based on your specific buildings in your association to get a cost of the building. So yes, and yeah.
Now on the coverage, is that just for the, like the skeleton and then the interior, like each individual, like person is responsible for their own interior?
So it depends on your bylaws. You're going to hear me say this a lot. A lot depends on how your bylaws read. So there is a section in the bylaws that's specific to insurance. And every set of bylaws I've read has been a little bit different. So it'll say the master association is responsible for insuring potentially just the building up to the studs, or it can be what is referred to as full condo or all in, which it would rebuild everything up to spec. So when you bought that unit, it'll rebuild it to that, but not any betterments and improvements that you have made as a unit owner. So if it was a tile floor or countertops and you put in granite, it's only going to build it to that tile. And then you would want to make sure your unit owner policy has coverage to bring it up to your betterments and improvements, as well as your personal contents. So all of your personal property and belongings will have to be insured under your own HO6. So I can't say for certain, it depends on your bylaws. So it's really important that you're reviewing those with your agent when writing an HO6 to make sure that you're insured according to that.
And we send out, when you ask for like a certificate of insurance of this, we do at Marris Brown, we do send out that we do remind you, dear resident, and we have this letter that we do send that tells, what your dwelling provides, your personal property, personal liability, loss of use. And we, say that we'll be more than happy to go over your personal coverage if you'd like. And we give you the insurance section of your condominium so that you can take it to your agent or you can have us review it for you. And we send that all out when he asks for a certificate of insurance.
Yeah, we're happy
That's
to.
on the HO6?
Yes.
Yeah, we're happy to review bylaws with you, or if you want to go to your attorney and make sure they're written as intended. Either way, somebody's there to help. If you're not able to understand, your agent should be able to walk through that with you. Yeah.
I don't know if I'm jumping ahead. What about the landscaping around? Say a building got destroyed, but you're going to be driving bulldozers over that, saying the trees are going to be level or whatever. How is that covered?
So there are supplements for like trees and shrubbery. And so it depends on the policy that the master association policy will cover. So yes, there is coverage for that.
So we'd have to have separate coverage.
The master association policy is going to provide coverage for that type of miscellaneous stuff around the property. So for damages, yep, for like trees and signs or anything outside of your
The
unit.
lawns, we repair our lawns.
Sadly, I don't think so.
Roadways covered?
It depends on the bylaw. So it depends if the association is responsible to maintain the roads. If they are, yes. So we would have to make sure they're being maintained properly and potholes are being filled. And there's a lot more replacement work that is on the association's.
Sewer covers, the new communities will have, you'll see a lot more new communities of the road coverage and the sewers, the sewer tops covers on them, because those are expensive, believe it or not, and you'll see that more in new communities, that they'll have that right away in their bylaws to make sure that their roads are covered at the very beginning.
And there's some associations where the city's responsible for the road. So it just depends on those responsibilities again.
Yeah.
So, yeah.
Okay. We had a co-owner that needed insurance, for their personal insurance.
Yep.
And they told her that she has to insure the studs in the condo.
Okay.
Now, is something like that going to be in our bylaws?
Yes.
Yes.
Yep. So a good written set of bylaws will break it down really, like pipes, wires, conduits in between walls, furnaces, appliances, like that's what, and it's important to update those bylaws. I'm getting a little ahead, but we're discussing, it's fine. It's important to update those bylaws. So if they're really old, they might not be super clear.
Well, we had them done 5 years ago.
Yeah, that's
That
perfect.
should be
Yep. Yeah, I've seen some that have never been updated, and you can just tell like they need to maybe review the sections and just have them amended.
So our insurance just renewed, I won't say with who.
Okay.
But, they had said before that with our condominiums are 20 years old.
Okay.
And, we had some damage with the hail and all of that, but they said, if they were to have approved, not a work order, my brain is just dead.
That's okay.
If they would have come out and done the repairs or paid for the repairs, rather, they said that it would have depreciated. You would get a depreciated amount. I mean,
For the roof repair?
yeah.
Yeah, so that,
Replacement, yeah.
it does depend on your association. So if a lot of carriers are implementing what's called a wind hail deductible.
That's
Yeah, and I have that later too. So if you're, you'll see that more and more. Farm Bureau did just implement that as well, because of Michigan's weather in the past couple of years has just been obviously all over the country. It's been a lot more severe.
We had new roofs. We thought, well, they will get new roofs to get rid of that.
Mhm.
Then it came on the policy and I was like,
Yeah, yep. I can,
okay, so everybody's doing it.
yes.
And a lot of the content you guys are gonna ask are probably gonna be in there.
Yeah, that's fine. Either way though.
One item I wanna point out is that not every agent is equal, right? And so some agents will come out and actually look at the property. Some will sit on a computer and look at your property that way. And I've seen on some policies the value not change for years. And I'm like, inflation has gone up, but my property value insurance hasn't changed. So if you ever have questions about that, you can obviously talk to the agent. And if you really want to have a third party, I know a lot of reserve study companies, they actually offer an insurance appraisal. So, and they'll do it when they come out and do your reserve study. So that is something that if you want a third, perspective, a non-interested party, they will come out because they're already looking at all your components anyways. They already know what your responsibilities are, and they will be able to give you an insurable value. And then you can then come back and check with your agent to see if it's in line.
Yep.
So that is
We love to see reserve studies,
Yeah.
so they're great.
Yeah,
We love them.
reserve studies are very important.
Do you give a discount if you do have a new reserve study?
No.
Nice
No.
try though.
But that was good. Kind of one of those things that we expect an association to be maintaining and looking through their reserves, and getting that type of stuff done just to properly maintain their community.
And
That's how we look at it.
It makes your community and also the management company that they're on top of it. So the underwriters that maybe, they have this going on or this, that it gives a whole picture to your community. It does a bright look at it. So
Yep.
it does help in the long run in the underwriter's eyes when they kind of
Absolutely.
look at them.
Okay, I'm gonna keep going down. So miscellaneous property, and we kind of touched on that. Any of that property that's in a common element would be under the master association. Also what's called BPP, which is business personal property. If you guys have a clubhouse or an office, it would cover all the contents inside of that, on the master association policy. We'll touch on deductibles here. So you can have an array of deductible options. Usually the higher the deductible, it does provide some discount on the policy. It's something that we believe you should review yearly to make sure what deductible you have makes sense for your association. And if you were to have a loss, how much could you pay before the insurance kicks in? So something just to make sure you're aware of and looking at, because if you have a $25,000 deductible, and you have a loss, you have to pay that before insurance kicked in. So if you can't afford that, you might want to think about lowering it. So just something to keep an eye on, as well as the wind hail that we talked about earlier. You guys are going to see probably a lot more wind hail deductibles being applied. So in the event of a windstorm or hailstorm, that damage would have its own separate deductible, whether that's a flat amount or a percentage. You might be seeing that more. So separate from the property deductible.
And it's typically a percentage of the loss. correct?
Yes. So both. So we have
Okay.
percentage of the loss or percentage of the building value.
Okay.
Yeah, which is, it can add up quickly. So it's
Yes.
important to know. And it can be 1, 2, 5%. It can be a flat amount per loss. So it really is important to look at it so you can understand the overall risk that you have in the event of that type of loss, and if you can pay it. Okay. So to continue with property coverage, we want to review some optional coverages that are highly recommended, but they may not come automatic on your policy. So you want to make sure that they're endorsed and included. A big one is called ordinance or law coverage. So this is in the event of a loss, a partial loss. The city comes in and says there's these new ordinances and zoning laws that you have to meet when you rebuild. So say you have 2 walls that go down in a unit. In order to rebuild it up to these new ordinances, you're going to have to put it down to all 4 walls come down, rebuild. The ordinance and law coverage is going to pay for that undamaged portion to be rebuilt, because insurance is going to pay for any damages to be rebuilt. So if you don't have ordinance and law and the city comes in and says, hey, you got to do this, this, and this to get up to code, you might not have a coverage in place if you don't have ordinance and law coverage. There's an A, B, and C breakdown in there. A is just what we talked about. B would be, it pays for any demolition costs to bring down those additional walls that need to come down before they get rebuilt. And then C is going to be called increased cost of construction. So say there was a fire loss. The city comes in and says, we want you to put sprinklers in your building going forward to help with these losses in the future. You didn't have sprinklers before, but they want you to have sprinklers now. That's an increased cost. That is where that coverage is going to come in and pay for that. So just important to make sure you have on your policy. Like I said, doesn't always come automatic. Farm Bureau, we do add it to every policy. You have to ask us to remove it. That's not always the case, so just important.
And the older your building is, the
Yes.
more important that is.
Yeah.
Absolutely.
There's a higher chance that you're gonna have ordinance changes since when you were originally built.
And never remove that coverage. Don't have the Farm Bureau to remove it.
Yeah, we actually make you sign off if you want to remove it, because we're like, we really don't recommend. So same with water backup. So that's also usually going to be endorsed on your policy. So this will pay for any losses that result in water backing up through your sewers or sump pumps or pipes or drains. So it's literally, think of it as backing up. This is different than a water loss. So if it's a frozen pipe burst causes water damage inside of a unit, that's separate. Water backup is specifically for backing up through your drains. So this will cover, in the event of a loss, the association policy and the HO6 policy should both have water backup, because association is going to have to repair up to what the bylaws say at the minimum, the studs and the framing, but potentially the drywall. And then the HO6 policy is going to, at the minimum, have to pay for the betterments and improvements that they've done in all their contents that got destroyed potentially by the water backup claim. So just, yeah, go ahead.
Does that cover like if there's a belly in the pipe under the cement? We have that. I'm just asking if that would be what I would need to have water backup. Would that cover that?
That might be covered under a water damage loss. But it depends if it backs up through the pipes. Did it just burst?
No, in our basement drains, there's, you know, under the cement, the pipes, and there's a belly going out to the sanitary sewer.
Yeah.
And then it backs up and.
Yeah, so that would be that would be covered under your water
Yeah.
backup. Yeah.
Okay.
Yep. So, but if you didn't have that coverage, you would not have any coverage for it. Yeah. So
What about sump pumps?
sump pumps, it covers back like failure. It does not cover replacement of a sump pump though, or maintenance. So you still have to maintain your sump pump
Right.
and replace it. But if there's a sump pump failure, yes, it'll cover that if there's water backup due to that.
We don't have a basement.
You don't have a basement?
We've got slab.
Uh-huh.
So do you need water backup? Yeah, or-
I would still have it, and 'cause it can happen not in a basement. I mean, it can back up through your sink sewers and drains, I'm sorry, and cause damage there.
Disgustingness.
Yeah, not fun.
Yeah.
So yeah, we do recommend having it. Obviously, it most likely occurs in a basement more often than not, but just something to look for in your HO6 policies as well as the master association policy.
And it's important to have the water backup even if you don't have the basement. Just because it, like you said, it's your typical coverage only covers water from the sky, generally speaking.
Mhm.
Yeah. And if it's coming up, it does not cover it. I had an instance with my house personally, was it 23 when we had all the terrible weather?
Yep.
A tornado hit my neighborhood and it tore off part of my roof, it tore off my patio. And then simultaneously, my city had a stormwater system failure, so all of our basements backed up.
Ah, gee.
Well, I didn't have water backup coverage. And I'm like, well, it's wet from the rain because the roof was gone, but I also had damage from what came up through the storm drain. So I didn't have coverage for that. So lesson learned,
Yes.
but that's exactly why you need it
Yep.
from an association standpoint as well.
And just to clean that up is they have to go in and they have to cut all around, you
Yeah.
know, dry it out, you know, and you have those air dryers to dry it down, they cost, you know, from the hours, and then they have to cut it up. So it is an expense, it's quite the expense, and really the cost to have it endorsed on your policy is not that much.
Minimal.
Very minimal. Definitely way worth it
Like,
to have.
I can attest to that
Yeah.
personally.
I'm sure you have it now, right?
I do have it now.
Yeah. All right. Any other questions on the property coverage that we just went through before no? Okay, sorry. Before I move on to liability. All right. So the second part that you will see in your policies is going to cover for liability. So this is somebody gets hurt on your property. It's going to help pay for legal fees or medical expenses for that injured party. So very important because these can add, a lawsuit can add up very quickly and fast. So some things to look out for is what limits you have on your policy. Generally speaking, it's going to be what we call 1, 2, or 2, 4. So it's going to be $1 million per occurrence, $2 million per year, or you can increase those to $2 million per occurrence, $4 million a year. Generally, if you want to go higher than that, you'll have to get an umbrella policy, which we'll touch on in just a second. Some things to think about for your general liability limits, and if you want to increase them, is the exposures you have. So if you have a lot of ponds or a pool or a clubhouse that has an exercise room in it, anything that obviously has more risk, a playground even, for somebody to get hurt, you're going to want to make sure you increase those limits based on your exposures that you have. And then, like I said, you can purchase a separate policy, an umbrella policy. They're usually pretty inexpensive and they give you a lot of coverage. So we do recommend to at least have an additional $1 million in coverage. This umbrella policy sits above, just like that picture, sits above the general liability limits that are on your standard policy. So so say you have a slip and fall claim, and it exceeds your $1 million that you have on the policy per occurrence, your umbrella policy will kick in and pay the additional fees associated up to whatever limit you guys select. You can get umbrella limits from 1 million to 15, 20, as high as you need. And that works for your association. Yeah.
Like, if you have something like a water heater break
Mhm.
and it's damaged somebody else's.
Yep.
Does that cover, does the liability coverage go into their property?
So liability will be separate from property. So you will have coverage in that case, yes. Both unit owners' policies are probably going to come into play there. And the insurance and adjusters will work that out, and probably the association policy as well. But yeah, so when anything property or tangible would fall under the property coverage. So liability is really for somebody getting hurt. It could be physical, or it can be like reputation or libel and slander, or any of those that they can sue for. So yeah. And then just something to look out.
Slip and falls.
Yeah, it's the biggest one for condos. So something to look out for the umbrella as well is you are able to schedule, if you have other policies, a directors and officers policy, a work comp policy, you're able to schedule those limits under that as well. So the umbrella can come into play for multiple different policies under it and provide a lot of extra coverage. So just something to note that you are able to schedule other policies, liability limits underneath.
I look at this is like another bag of money. You got the bag of money for your association for the property coverage. Then you got a bag of money for the liability cover. And then you got the umbrella, another bag of money for that. And then we'll get into the other policies, which will be another one, so that you're not constantly taking out of your main policy, the main property policy. You got these liabilities, umbrella, and then you'll see as we go along, D&O and credit as we go.
And then just to touch on, umbrella policies are optional. Obviously, we recommend them because we have seen where without them, there has not been enough money to cover the fees, and then condos have to deplete their reserve funds or specially assess the unit owners, and that gets in a whole lot of places that no one wants to be in. So if you had that umbrella policy, it would have covered that gap. So just, it's optional, but definitely something to inquire about with your agent if they don't already bring it to you, because most of the time they probably will offer it.
We are a Sioux society, and we get up to 3-4 million is not.
Yeah, sadly.
uncovered for liability.
And you can be sued for anything by anyone for any amount, for actual or alleged. It's unfortunate. Yeah.
We have a pavilion that is really not used by anyone.
Okay.
Is there any benefit if we put up a sign saying private property, no trespassing? Would that benefit us if somebody did get hurt insurance wise?
They're still going to try and sue. We
Right.
do recommend, so if you have that, or a ponds especially, we will recommend putting up signage that just says, safety concerns on there, or
And that
pools.
will cover you somewhat, or?
It will not stop somebody from suing. It might help your case, but I mean, there's still, it's not going to be the thing that ends it, where you're like, no, we don't have to.
Yeah, we have a sign.
Yeah, exactly.
Yeah.
But obviously it helps. It shows that you are aware, you're trying to educate, you're trying to do the proper things and put in place to make sure people know.
Because that's the first question the judge is gonna ask, whether any signs of warning
Yep.
of what you have. Same with around ponds that say no swimming.
Yep.
No, and that's gonna be the first question, and the judge is gonna ask. It's, common sense that you look at as you walk around, and then also what your great property managers, their job is to do, too, is to point out the risk.
Is one sign better than the other one, like no trespassing versus private property, or is it kind of?
As far as that, I don't think so. I think really it's if you have any bodies of water to really say no swimming, no jumping, no, whatever type of body of water is, those signs are,
So we have nothing that.
They're all standard.
We have fence around our retention pond.
Okay.
We have.
see, that's even better. Yeah.
Yeah, that's it.
Yeah. Because you never know if there's a little kid that doesn't know and
Well.
they're rolling down a hill and you just don't know. So sadly things happen. Exactly. Yeah, that's exactly right. So, all right. So we're just we touched on bylaws a little bit, but just to touch on them a little bit more. When you are asking for an insurance quote for either the association's master policy or your HO6 policy, first thing the agent should be asking for is the bylaws master deed. Because like I said, we insure based off of what it says in your bylaws. So To be properly and adequately insured, they need to be reviewing that. So if they don't ask, please bring that to their attention and say, I'm going to send you these so we can make sure we're following the bylaws and you're properly insured. It'll break out the responsibilities of the co-owner versus the association. And then also, it's very important to educate the co-owners as well as best as you can, what they're responsible for. Because a lot of the times they might not realize. So they might be overinsured or underinsured, which is even worse. So if you can put out, those letters that we have send out, we are happy to send those, or we're happy to do education seminars for unit owners. Anything to help make sure everybody's properly insured. So all from those bylaws. So just wanted to note how important the master deed and bylaws are to you guys in your insurance coverage.
And they are, because when you have the hierarchy of these bylaws, it goes with federal law is first, then you have state law, municipal law, then your articles of incorporation or recorded documents, which is bylaws, and then your rules and regulations. So, there is, something that your lawyer has to look at and you have to think about. So it is important for those bylaws to be reviewed and that you have everything covered in there.
And it's a good practice to, at annual meetings, or if you have like an annual newsletter, just remind people of what coverage they have. I always recommend that you, as an individual owner, go to the same agent that insures the association, because they should know exactly what the association's insuring and what you should be insuring. So it's good to go to them for your individual HO6 policy, because there's not a lot of agents will write HO6 policies, but if they're not super familiar with condos, you may be putting yourself in a situation where you're over or underinsured. So it's good to go to the same agent that insures the association, or at a bare minimum, take that section of your bylaws to the agent when they're quoting it, so they see exactly what they should be quoting for you.
Yep. And even if it's not through us, we are happy to help confirm if needed. I've had many people reach out and say, they're saying this, is this right on our association? Is this coverage I need? We're happy to help. So
Would the co-owner get a discount if, the association is covered by you and then the co-owner as well?
no.
Like your car insurance.
Like a multi-policy discount? No.
Right.
But we do bundle, not with that. That would be great. But we do bundle. So if the association has multiple policies, so if they have a umbrella, the standard business owner's policy, a work comp, they have a bunch of policies with us, they will get a discount. Or if as a unit owner, you have your unit owner and your car insurance, and that you personally will get a bundle discount. So that is available.
You'll get a discount. Also, if you belong to different associations,
Yep.
there's discounts 10%. I do believe I have CAI is a discount of 10%, which KS Management is a member of the condominium association, and just being a member of that, if you mention it, you can get a discount for that. 10% is on there.
Trying to get these.
I can see.
Senior discount.
Yeah.
We got a resident, here.
I have- Hi, yes, this is Karen Terlecki from the Crystal Crossing Board down in Brownstown. So we are,
Hey, Karen.
hi, we're site condominiums, so we are individual homes essentially. We don't have any attached units, so
Yep.
we don't have any co-owners don't have an HO6 policy. Is that correct?
So you're like a true homeowners association.
Yes.
So yeah, they would still need some kind, I don't write this very much, so I know that they still need the association master policy. But as far as the owners of the condo, I would imagine they would still need their own insurance policy to cover
Right, they still have,
the building.
Yeah.
they still
Yeah,
they still have it, then you still have corporate bylaws, and you
Yeah.
have covenants for your HO6 with that. So yes, you do have that, and then your own insurance you would have for any common area, that's what's covered under your your HOA insurance.
Yeah, so the
Okay, so-
master, sorry, go ahead.
So the co-owner are the unit dwellers.
Yeah.
So,
Correct.
but because they're individual units and not attached, they have, like I have a homeowner's policy.
Right.
correct.
Right.
Okay. But
But
our association, we do have a property
Yep.
insurance policy to cover. We have a playground, we have a detention pond, we have common elements.
Exactly. It'll probably be a lot less because it's covering just the minimal common elements, like you just said, and not the structure of the buildings, but they should still have that in place as well as to cover any liability
And you
claims.
have D&O coverage too.
Mhm.
They have D&O coverage also, so you have the same also.
And Karen, your homeowners should be still, when they get that insurance policy, they should still be sharing the governing documents with whatever agent it is. So the agent knows, because there's some HOAs that the association's responsible for the driveway or the association's responsible for a sidewalk. Sometimes it's a homeowner. So it's still important to make sure they're looking at that, to know that they're covering the right things.
Okay.
And
All right,
Correct me
thank
if
you.
I'm wrong, but you have the master policy for the association,
Mhm.
and HO6 is for condos, and HO4 is for a rental dwelling type situation with like the landlord renting.
Yep.
Yeah, and then you've got your
Homeowners,
policy
yep.
Homeowners
for
policy.
like a homeowner association or a site condo. So those are kind of the variations.
Yep.
correct?
Yeah,
All right,
but
thank you for that clarification.
Okay. Okay, so we're gonna get into a little bit of those unit owner policies, the HO6s that you guys would have, and just some coverages that you would most likely see and want to see on the policy. So again, we reiterate to make sure you're reviewing the bylaws with your agent. You're gonna wanna, this is as a unit owner, you're gonna wanna make sure that the interior of your unit is, you have the right value for that. So that's something, again, that your agent they will do an appraisal on the interior of the unit. We have found that a rule of thumb is usually 125 up to 400 square feet, depending on any finishes or betterments that you've made. So if you've done a lot of rework to your unit, you're gonna wanna let your agent know so they can value that appropriately. Very important, even if you make them, like you make a couple midterm and it's not your renewal, just reach out, let them know, because you never know when that loss is going to happen. You want to make sure you get rebuilt back 100%. Same with personal property. So these are the contents in your unit. So we kind of explain it like if you flip your condo upside down and shake it like a dollhouse, everything that would fall out is considered your personal property and your contents. You want to make sure you have coverage for that. The rule of thumb for that one is $75K for the first 1,000 square feet, and then an additional $20K, $21K for the next 500. Obviously, these are going to change based on what you have to insure. It's really important that you can create some type of inventory. We have found the best way and recommendation would be to take a video. So open up all your cupboards, your closets, your drawers, everything, and just take a video, like walk around your house and just video in a drawer, because at the time of a loss, trying to think of everything you owned is going to be daunting, and it's the last thing you want to deal with is an insurance if that is happening. So if you have that video or pictures, or if you want to handwrite it all out, if you have something to go back to say, you know, this is what I had, it's going to help a lot with the claims process. Also important, if you have any jewelry that exceeds a certain amount of limit, or if you have firearms or fine arts that you know that are worth more, you will want to specifically schedule those on your policy. So that's a discussion you'll have with your agent. If you have antiques or anything that you're like, I want to make sure I get this full value back because it's worth more than even the limit that I have on my policy, you can specifically schedule that with your agent. It might require an appraisal, just depends on what it is that you're trying to schedule, but it is important at the time of loss. That way it'll be listed. So if you have $100,000 worth of diamonds, it'll be listed on your policy, jewelry, diamonds, and the amount that you will get back at a loss. So something to think about if you have any of that you want to make sure is scheduled specifically on your policy.
Something that's good to keep in mind is there's things that may not necessarily have a set dollar value, but have like an heirloom that has sentimental value.
Yeah.
You know, when the restoration company comes in and has to take care of it, that item may not have a lot of value, but it does to you. And it may take a lot of extra time to clean or restore whatever is necessary for that item. So those are things that may not cost a lot of money, like to physically buy and like.
Like,
Take
like
block.
Tiger's cards or something like we talk about,
But
like,
to get smoke damage and restore it, which it's amazing what they can do to restore.
Yeah.
There's a contents restoration company and they can really restore just about anything, but it is costly, especially if it's memorable to you.
yeah,
If you have
sentimental
some
value.
coverage, you can get that.
Yep. Hmm.
And that would be covered in there as well.
Yep, yep, on your policy, yep.
But don't go around advertising you have $100,000 in diamonds.
True. But you would have coverage for that if that was the case. Okay, and then also your HO6 policies are going to cover your personal liability. So if someone were to get hurt inside of your unit and they sue you personally, you will have coverage for that. You want to make sure that amount is sufficient. Talk with your agent, look at your net worth. What could they come after if they sued you? It can go as far as garnishing wages. So you just want to make sure people will go that far. You just want to make sure that you have proper limits in place to protect yourself from those losses.
And that's probably the most affordable to have increased liability.
Yeah.
on your
Oh, yeah.
policy.
Yeah.
It's really pennies
Mhm.
and to have it go to $1 million, it's really, like $25 to $50 on some
Yeah.
policies. So and that's a great way to have extra coverage. Especially if you're on a board too, you should have your own liability coverage, increase that up for yourself.
Do you have a question?
Yeah.
Yeah.
On our condos, the driveway
Mhm.
and the sidewalks and porch are up to the homeowners.
Okay.
To cover. Okay, so what if someone, I would cover, but can they then go after the association as well?
They probably will try. So,
The deeper pockets.
yeah, they're gonna try to sue everybody. Everybody's gonna get brought in and they're gonna make a
Yeah,
Yeah, we'd be
determination.
primary, they'd be second.
Yeah.
Yeah.
The association would be second.
If it was found that, like, a big one is if the sidewalks are the association's responsibility and it was icy or snowy and they didn't salt and that it was like negligence, people fell and slipped. That's the type of situation where, it would be on the association, not the unit owner. If the association was negligent and not taking care of something they were responsible for.
Okay.
That's why
Um,
your managers have schedules for the ice that they
Yeah.
have to show that if there is anything, to show a reasonable days and times for a court that they do have ice scheduled to clean and snow plow.
And especially now with, I don't want to dive into that whole topic, but
Yeah.
open and obvious.
Yeah.
That doctrine was overturned, was it last year?
Yeah.
I
this
think
year?
so. Last year already, I think.
So there used to be it was a doctrine, it was a state law that if something was open and obvious and someone fell on it, it was, I don't want to say it was automatically kicked, but it was more than likely just kicked out of court if you tripped over a hole in the pavement. You should have seen the hole, you shouldn't have tripped. We're kicking it out of court. Correct.
Yeah.
Walk over here, it doesn't hold as much weight as you.
But that has now been overturned and there's a lot of case law even going on right now where that's not holding as strong as it used to. Judges are not just blanket statement saying, hey, it was obvious you shouldn't have tripped. It's your own fault. They're not doing that anymore.
Yeah.
So it's especially important for liability coverage now.
Yes.
Yes.
Yeah. And then you'll have loss of use coverage on your policies as well. So this is any costs that you incur if you have to relocate. So if you have to move out while your unit gets rebuilt, what would it cost you to Airbnb, hotel? Are you able to stay with a family member, but you have to buy a storage unit or you have pets that you have to board? Any of these unexpected costs, this loss of use coverage would help pay. So something to just talk about, make sure you have on your policy appropriate
And think
limits.
about for 12 months, because usually, it
Yes.
could be out for 6 to 12 months of your place. And a lot of times when they get your personal policy, they don't increase that amount unless you ask. So do take a look and, figure about how much it would cost you to live 12 months out of your place.
Yep.
And it's, again, a little bit of money just to increase it.
And then loss assessment coverage. So this is arising if for some reason the claim exceeds the association limits and they have to specialty assess the unit owners, you'd have some coverage in place to help with that. It does happen, unfortunately, where additional assessments have to happen and, you know, co-owners will have to pay that. So it could end up being large and burdensome, and you can reach out to your insurance.
Homeowner wouldn't have to pay the assessment, the insurance would cover it?
Yes.
Yes.
Yep.
Yeah, and that's unfortunately, it's becoming more common. I've seen it a
Yeah.
lot here recently, where an association has a large loss, or maybe they even get kicked from their insurer and have to go into a high risk policy. And whatever the cause is, the association has to assess that to the owners because they don't have that on hand.
Yeah.
If the co-owner has this loss assessment coverage, they can just turn it over to their insurance, and their insurance will pay whatever that assessment is.
So pick that up as much as you can.
Correct.
Yeah, because it's gonna be up to a limit, of course,
Yeah,
but
yeah.
yes,
So
it is
not-
important trying to
you
get the
know,
most.
so kick it up and again, that's not real expenses also.
Yep. Unfortunately, a lot of these, you have to ask for the increases. And
Yeah.
so then they'll quote you and you can decide, is it worth it or not? But
Yeah.
at least you know to ask and to review at that time.
Yeah.
So we did touch on some of these already, but what we see a lot as a pitfall sometimes in a unit owner policy that might not be there is the water backup again, which I know we discussed. So just to make sure that you do have that endorsed. Knowing how your personal property and interior unit is valued. A lot of the times on HO6s, they will be valued at actual cash value. We like to see replacement cost, usually going to cost a little bit more, but that will get you everything back to what it costs today in today's world. It will replace versus depreciating it. So something to look out for in your policy so you know how you're valued. We did talk about the scheduling of the jewelry and the firearms. I got ahead of myself, so that's on here, as well as sentimental value. So a couple of things to look out for as well will be if your association allows rental units, just to make sure that there's proper coverages in place. You're going to want to make sure that that tenant has their own renter's insurance that covers their personal property, as well as still the unit owner needs to have their HO6 to still cover everything that they're responsible for. A lot of the times they'll rent out and think like, oh, I don't have to, insure this anymore because I'm renting it. But you do, that renter's only going to have insurance to cover their personal property. Yeah.
Is ensuring that all the homeowners have a HO6 policy,
Mhm.
can we enforce that?
Yes. You can, absolutely. We have seen it being written in the bylaws a lot more, where you enforce an HO6 policy. And then somebody will collect certificates of insurance to make sure that they
Yeah,
are.
So that's still enforced.
Yeah.
Not your management company. We
Yeah.
don't want to do that.
Not-
So a good way that I've seen in there with some bylaw revisions recently is having that mandate. Of course, it mandates that you have to have a HO6 policy, but rather than having a requirement that they have to produce it yearly or whatever that may be, is forcing the owner to actually list the association as additional insured.
Mhm.
So then the association will get a notice if that policy is ever canceled or changed. So then you don't have to monitor it on a
Yeah, because
daily
it can be
basis.
cumbersome if they're changing or
Correct.
leaving. It is hard to
And
manage.
that's something insurance companies will do, they'll list.
Yeah. Yeah.
Association.
Definitely. And then another thing, talking about bylaws, we do recommend if they can put a cap in place for how many rentals you do allow in an association, because the more rentals that you have, it does affect your premium. So if you can put a cap on that, usually if it's allowed, it's going to benefit the association in the long run. All right. So that was basically everything underneath your standard business owner's policy, property, liability, and then individual HO6 policies. So now the next few slides is going to be ancillary policies that we recommend that condo associations have, starting with workers' compensation. For the most part, condos usually don't have direct employees. If they do, they would need a true work comp policy that's audited, and if you have real payroll. What we mostly see is it's just volunteers, but you want to make sure you can get a very inexpensive work comp policy. It's called an if any work comp policy, and it covers board members, volunteers, and uninsured subcontractors. So in the event any of them get hurt while doing work on behalf of the association, you would have coverage. So if you guys have a group of volunteers out doing like cleanup around the signs with planting flowers or, something on behalf of the association and they get hurt, they could have some coverage here from workers' comp. Yep.
And it also covers if you have a vendor
Mhm.
on the property doing work and they have their own policy, but it lapses for some reason. They don't make the payment. Their coverage dates didn't line up with when they were on site and they get injured. It could kick back on the association's work comp policy. So
Yeah.
it's just always ensuring that the association has some sort of coverage in place.
And it's only like $500.
It's exactly, it's exactly what it is.
Yeah.
575
for $1 million of coverage. So it's and that's for the year. It's very
And
inexpensive.
it covers up to 100 volunteers.
Yeah, it's,
And your management company loves that policy because it's non-audited, so we
Yes.
don't have to do anything.
yeah, that's the best. Much easier than a true work comp policy, that's for sure.
You don't want to deal with the state of Michigan on this.
Okay, another policy that we would say is probably one of the most important policies as a board member is directors and officers coverage. So this protects the board member from, in the event they get sued. So any liability with that. So if a co-owner or even a visitor or a delivery man, I don't know, anybody can sue the board if they were doing wrongful acts, both alleged and actual. Common reasons would be if you fail to adhere to your bylaws, discrimination, mismanagement of funds. You could get sued for as a board member. So this directors and officers coverage will protect you in that event that you get sued. There's a couple of things to look out for. Just to note, they will either list that you have defense outside the limit or additional limit of defense. Not to get too in the weeds on that, but that just gives you, so you have a liability limit of $1 million for your directors and officers coverage. If you pay a little bit more in premium, you can get what's called defense outside the limit, and that will most likely be an unlimited amount outside of that liability limit. So you have this bucket of $1 million, and then they'll provide defense for you outside of that limit, usually unlimited. It's what we recommend. It's what we've been putting on our policies going forward. It provides a lot of coverage for usually very inexpensive cost. So just something to note that you might see more of. It's becoming more standard with policies.
And this is the one.
Yeah, go ahead.
This is the one that you said that the umbrella could be.
Yep, exactly.
Yeah.
So again, that can also provide more coverage if you have the umbrella. Same with the workers' comp. So yep, any liability coverage can sit under the umbrella, most likely.
If you want a good D&O coverage, we go through Kevin Davis.
Yeah, we use Kevin Davis.
Travelers.
They are like experts. So you might often, depending on your carrier, they might write D&O on your package policy. We don't do that. It doesn't offer as much coverage. So we like to go outside to Travelers. They offer a lot more. It's more robust. So just something to think about. Not all of them are created equally and offering the same coverages. In that big red box is a couple items that Travelers does cover. That's important.
And then they cover adoption of rules,
Yep.
assessment decisions that a board makes, breach of fiduciary duty that you have, defamation of character. Believe it or not, you see that a lot out east.
Mhm.
You talk about maybe your spouse, one in the room, there talks about someone else's, they're out of another member, and that's their character. You'll see a lot of that. Election disputes is covered under it, and failing to enforce the bylaws is also a protection you can get.
And it does cover you as a current board member and future. So if you leave the board and someone comes and files a claim when you're gone for while you were there saying someone discriminated against me, you will still have coverage. So it'll cover you even after you're gone. So that's an important note.
And it's very important to note that you as board members, obviously anyone can sue anyone for anything. But if you are given advice from an expert in the industry, an attorney, an insurance agent, a management company, and you go against that advice and you say, nah, I'm not taking that advice. I don't agree with the attorney. I'm doing this anyway. And you get sued for that, your insurance will not cover you as an officer. And then you could potentially be sued individually as a person on your own. So it's always important to follow the advice of the attorneys, of the insurance agents, of the industry experts that you work with, because that's yet another additional layer of protection for you as a board member.
Which is kind of like I said earlier, we would make you sign off on certain things if you're not going to, because it protects us as well. We're like, we really recommend it. You're saying no, and we're saying this is why we're gonna have you sign off. Just so there'll probably be some red flags if that's happening. Be like, maybe I should look at this more. But yeah, that's very important.
In addition, it's covering your acts as a board member. If you decide to do something on your own outside of the board, then you're not necessarily going to be covered as a board member.
Right.
So, if the board decides, hey, we're doing X, and you go off on your own and do Y, then that is an act outside of the board and therefore wouldn't fall under this type of a coverage.
So don't go rogue and do what the experts advise.
Yes, and adhere to your bylaws. That's a big one.
Yeah.
So very important coverage as board members to make sure that you guys do have. The next couple of slides are just to go along with directors and officers coverage, just to make you aware. There are two different types of coverages. One's called occurrence coverage. One is called claims made policy. You just want to know, basically, at the time of a loss, you're going to just tell your agent that, hey, we have a loss. And they're going to probably take it from there with these two slides. But just something to note that there are policies that are triggered by when the loss happened, so occurrence coverage. So if the loss happened from, I think the examples up here is 2016, a little outdated, but if a loss happened in 2016 and you had an active policy, but it wasn't reported until 2017, your 2016 policy would cover it. So it's based off of when the loss occurred. That's what policy will cover it. And then opposite from that, if you have a claims made policy, it's the opposite. So if you had a loss that occurred in 2016 and you reported it in 2017, the 2017 policy will cover it. So really, it's just to be aware that there are two different types of coverages. Your agent's really going to review it and figure out where we're going to file this claim. But just to be aware that there are two different types.
Which policy do you guys have?
We offer a claims made policy.
So yours would be a claim.
Yep. But we've seen them both, so occurrence as well. The main time that comes into effect really is if you're switching from one to another. That's when it's important. So you want a claims made policy. If you're switching, you want to make sure they'll offer you what's called extended reporting period or tail coverage. It gives you, if you pay for that, it extends the time you can report a claim. Something to discuss with your agent at that time, though. Like I said, they'll help walk you through this. It gets a little convoluted, but just to be aware. And then to go along with that is another policy you want to make sure you have, which is crime coverage. This is essentially to protect the funds of the association from theft. You might hear crime coverage called fidelity or employee dishonesty. They're kind of interchangeable. Really important that you have this coverage in case that they get stolen. So a board member goes off with some money, a property manager never would, but take some money, you never know, or even a scam online, forgery, alteration, lots of ways that people can go out there and gain access to funds. So you just want to make sure that you have this covered so you have appropriate limits to get your money back. Yeah.
When I lived in California, I rented a condo.
Yeah.
And the former management company absconded.
Yeah, it happens.
It took a long time to get things sorted.
It does,
And
yeah.
People couldn't get their gifts sold.
It's miserable. Yeah, it's sad. Unfortunately, it happens. There's a lot of smart people out there in the world as well. Cyber can happen, and they're getting better and better at it. So it's just something to make sure you have that coverage. We do usually recommend, and a lot of the times if you have a loan, they're going to require it anyway, to have 3 months of dues plus your entire reserve fund as that limit at a minimum. So that's usually what we like to see as the limit. You can obviously pick a higher limit. We wouldn't suggest going below that. Also, sometimes your bylaws might require a limit. That's kind of becoming more and more popular as they're getting rewritten. So if that's the case, or if it's something you guys want to add to your bylaws, it doesn't hurt to say we want to make sure there's usually 3 months of dues plus reserve fund as this limit.
And you'll even see that sometimes as someone's buying a unit within the association, if they're getting a loan on that unit, during that lending process, they'll reach out to the association sometimes and say, hey, you need to increase this coverage because they want the same thing, at least 3 months plus the current amount.
And some,
FHA requirement.
It's
Yep.
FHA, VA
FHA.
requirement as
Yep.
well.
and we also recommend yearly to look at that amount, because a lot of the times you're going to be raising money for roofs or for certain projects or just different things why you might have a higher reserve fund than normal. You're going to want to increase that limit if you do. You can always bring it back down once you've settled to your normal, but we like to review financials yearly to make sure, and also recommend that the board does as well. So just something to note, to always be looking at that limit to make sure it's sufficient. And then a few items that some carriers might require to write crime. So controls, they might ask that there's counter signature of checks or segregation of duties. So there's not the same person that is signing, depositing, withdrawing. You kind of want to make sure, you know, it's more secure if there's multiple people doing it, and checks and balances. And then also we do recommend that there's a yearly audit of sorts, whether it's a CPA or internal or property manager, or, you know, just auditing those financials once a year will also keep you in line. Okay. That brings us to just some eligibility topics that and rate bearing factors that we wanted to discuss that we've been seeing in the market for standard carriers, what they're looking for and what they won't write. So prohibited electrical has become a really big topic, especially if your condos are built between like 1970 and 1990. They might have some outdated electrical that has been known to cause fires. So your carriers will do periodic inspections. And if they find out that you do have one of these listed prohibited electricals, we will be asking that it's fully replaced in order to keep coverage. Farm Bureau will work with you. So if we find out, we'll ask for a plan with a, you know, electrician of when you're going to get it done within 60 days. But sometimes it can take the whole year to get that replaced. We understand you have to build up funds, or there could be a large association. Things take time. So as long as we see that there's effort to replace, it'll be fine. But if you don't replace it, you will get canceled or non-renewed, rather. And finding coverage again, knowing that you guys have that, is very tough. And I have not been able to secure coverage in the standard market. When I know this is the case, we have to go to what's called excess and surplus market. And that is not anywhere a condo association wants to be placed for insurance. It's a lot more money, a lot less coverage. Just, you know, not ideal. So if you're with a standard carrier and they're telling you to replace it, it's in your best interest to replace it, because the alternative is not going to be great. So that's something we're seeing a lot more of, just to keep you aware. Also, if you can take an inventory, you know, sometimes as a board, if you can ask your unit owners to let you know what's in their unit, keep a list, keep a spreadsheet, update it. That will help when you get that question. You're like, no, I just got it. Everybody's got, you know, this electrical and it's fine. And they can let the insurance agent know. We've even been getting pictures from unit owners to confirm. We're happy to send out inspectors if you're not aware, because a lot of people aren't going to know what those are. We're happy to send out inspectors as well to help with that process. So between the insurance, the inspectors, the property manager, the board, we can work together. To figure. Yeah.
Smoke detectors, working smoke detectors, does that have any impact? Because, you know, a lot of our units are original, and we've actually had somebody come in and test them and they're not functional.
Yeah. So we will, if there's a fully sprinklered, yeah, we'll test that. I haven't seen standard carriers really testing smoke detectors yet. I mean, obviously that's something we just hope that is being replaced and working, and you never know where it's going to go, but exactly. Yep. And then I will say bathroom fans though, talking about that, we have seen some older model bathroom fans that have caused fires or they're super dusty and like not being cleaned. So those cause, I've seen a lot more claims with that. And so carriers might be inspecting the bathroom fans as well. And if they're really old, it might request a replacement plan on them. So just things to look out for. We have been seeing trends of certain losses and carriers are adjusting their standards and eligibility rules based off them.
Well, something like that would be the homeowners, right?
Yeah, so
That's
right, exactly. But the the association is gonna be
Enforce
affected
it.
by it. Yeah, they're gonna enforce it because it'll affect their insurance. So if it's not replaced, the association's master policy could potentially get non-renewed or canceled. So they're gonna definitely, it's gonna be a partnership to work together to get it done.
And the carrier may even force if there's recurring claims with something, if you have maybe multiple fire claims, they may then force and say, hey, you have to have certain smoke detectors, or you may have to. I've seen one where they have like the canisters that go over stoves.
Yep.
They forced everyone to add those because there was 2 or 3 stove fires that caused losses.
Yeah.
So the insurance can kick in and say, hey, you have to do X, Y, and Z or we're not insuring you.
They see a trend and it's like, okay, obviously something's not being done to alleviate this. We need to find out a plan to make sure we can stop these losses from
And
happening.
that would go to your personal insurance too, not only the master
Right.
policy, it's going to affect your personal insurance because you have a duty also to maintain, because they do ask you when you get an HO6, when you get your policy, do you have smoke detectors? They do give you a discount, so you're supposed to maintain those. So,
Yep.
so that is in their policy there.
I'm sorry to keep asking things.
I don't mind. That's what we're here
No.
for. Yeah, you're good.
I've been on this a long time. We have hardwired smoke detectors, battery backup.
Okay.
Our policy involves in,
Okay.
is it the association's responsibility? Would that be their responsibility to do the hardwired?
Yes, if it's walls in full condo, the association would be responsible for the wires in the wall and yep.
So there's sometimes a difference between what the bylaws say
And what
and
you're,
what your, so
Yeah.
always defer to what the bylaws say,
Mhm.
because there's a lot of times where they say, hey, we have, a policy that covers X, right? But there's some variations in the bylaws, so always defer to what the bylaws say, and in the worst case scenario, talk to your attorney
Mhm.
and they can give you an opinion on who's responsible for what.
And it's really important to note that the bylaws, they may assign responsibility for, we'll say, smoke detectors on a regular basis. It may be a co-owner's responsibility to maintain those smoke detectors and the wiring for it. But there's a separate section in the bylaws that says if there's an insurance claim, here's who bears responsibility. And that may differ from what the typical responsibility is. So it's important to always look at both sections, provide it to your insurance agent, and
Yeah.
see how it shakes out.
It's a great point because we get a lot of, that's where we see the most confusion is they're like, but I'm responsible for maintaining and repairing, but you're not responsible for insuring. So that's a lot of people think that if they're responsible for maintaining it, well, it's their responsibility to insure, but it might not be the case. So you really need to, look at that
Look at the
insurance
bylaws.
section.
they all.
Yeah.
We need to do shots every time we say, look at the bylaws.
I know, it's everywhere. You're gonna leave here and all go look at their bylaws. A few other things that carriers are gonna be looking at is the overall condition of your property, the age. So they want to make sure that you're maintaining it. There's not a bunch of trash everywhere. It just looks like you're taking care of it, That's something they're gonna look at. They're also gonna look at your walking and parking surfaces. Are there a bunch of potholes that increase the risk for falling? Are there a bunch of shingles flying off your roof? So, that's some things that we're looking at. Roofs are also a huge topic in the market. There's been a lot more roof claims than ever before. And that's why we're adding that either wind hail or it might be paid at ACV. We just want to make sure what we're looking for is that there's a roof replacement plan in place. Doesn't mean that you have brand new roofs because we understand that with condos, they're going to be phased done in phases. So we just like to see okay, maybe in 2005, you did these 3 roofs and then you're planning to do the next ones in next year. And, we just like to keep up on that roof replacement schedule. That gives you the best coverage for your roof. And it makes sure that you guys actually are allowed to get insurance because sometimes they won't write them if the roofs are really old and in terrible condition.
Because we have a lot of the condos now that were built in the 1970s and the 80s that are coming up. You look at, they haven't replaced. Now we got, 20, 30-year-old roofs that we're looking at.
Yep. And obviously it can take a while to build up reserves. So it's something that has to be planned. We're going to build up the reserves. We're going to start doing it here. And you can also get roof studies done, or the reserve studies, and they'll look and it'll tell you about your roof life and what's left. And we always like those as well. So we can, look at those with underwriting. So, and then also rented units, I know I touched on, but just to state again, if you do have over Farm Bureau, if it's over 15% rentals out of your total units, the rating goes up exponentially. So we call what's rating as a condo is what you guys are. If you have over 15% rentals, we have to rate it as an apartment. It's a lot more. So that's why we say we recommend putting a cap in place. We are asking how many rentals. A lot more carriers are asking that question. So just something to note. Yeah.
We probably have about 25% rentals.
Mm-hmm. Yeah.
And before I moved back to Michigan, they had put a thing saying you could only buy one as a rental. You couldn't buy two as a rental. You had to live in one.
Oh, okay.
So
Yeah.
Yeah.
I think one of our rental owners, I think, tries to sneak around it.
We are seeing some, even when they're putting the cap in, they might grandfather certain rent. They might have a tenant that's been there forever. They're a great tenant. They'll grandfather them in and say like anything going forward, we're not going to allow. So those are also, and
Grandfathered in.
yeah.
But I think he's sneaking around it in other ways.
Jeez, yep, probably.
Let's make sure he's that insured.
Yep. And it's just to note, if you see a big increase, it could be because of rentals. It's not necessarily, but it could be. We are seeing that. So.
And it's important to note that the question used to be on insurance policies was, are there, I forget how it was phrased, is there a single entity that owns more than X number of units? But now they're specifically asking how many rentals, because people used to try and skirt around it by creating different LLCs and having different rental entities. Well, now they can't do that
You can say
anymore.
it, okay. So before.
It completely avoids that and just asks how many units are rented in general.
Yep.
Okay. The next slide.
Next slide is.
So just in conclusion, we just want to say, for is communication between the manager and the board members. Most associations, business is conducted at a regular board meetings. Board members set policy, oversee managers' work, review operations, resolve disputes, talk to the residents, and plan for the future. So often the health and harmony of an entire community is directly linked to how constructive these meetings are. And it's very important to have member meetings, annual and special when you need them, board meetings to have them regular and special when those are needed, and executive sessions with the board members and your manager. And we thank you so much for today.
Yes. For any other questions, we're happy to.
Any other?
Yeah, I know. Yeah. What?
With home deliveries increasing, the Krogers and
Yep.
Amazons and whatever, should associations increase any coverage for this, or?
So, what you're at risk for there is somebody getting hurt. So it'd be a third party getting hurt if they're stepping upstairs. Unfortunately, there's not much to do if somebody's going to trip and fall unless, assuming the stairs are in place, everything, there's no potholes. It does happen. I'm very clumsy and I trip all the time over nothing. So it would just be increasing your liability limits. So if you feel like everybody's getting deliveries all the time, or Amazon, and maybe you want to think about, let's increase those limits to make sure that we have that coverage in place. The liability limits, that is. Yeah.
I have a trick question for you.
Okay, great.
So I think the mindset was different 3, 4, 5 years ago of when you should file a claim versus when you should just pay something out of pocket. Do you want to talk about that a little bit?
Trick question. So it's going to be based on the financial strength of the association. So carriers don't like to see small and frequent claims. That could go against you and maybe make it so you don't have coverage. So if you're able to pay for some of these small claims out of pocket, it'll help you in the long run with your insurance. Obviously, not everybody's able to do that. So if you have to file the claim, file the claim. That's what insurance is there for. But does that answer your question?
Perfect.
Okay, I was like, did I get that? Just
That's
because
where I was going
I
with
will
that.
say Farm Bureau's deductible minimum is at $5,000. Other carriers might go below, but they've increased it to try to help weed out some of those smaller claims that we're hoping associations can handle on their own. So,
Well, and that mindset 3, 4, 5 years ago used to be, hey, something happened, file a claim. That was a knee-jerk reaction. We get notified of a slip and fall, we immediately just file a claim. Well, that's not necessarily the best route to go anymore, especially if it's a small claim, because there's a ton of carriers that are looking more closely at that. They're looking at the things that Casey listed of different risk areas and different things that they're considering a little more highly now. So if you're filing a claim that ended up paying out $5,000, you are better off just paying for it out of pocket.
yeah. You can always put a notice in of the claim too, and it doesn't, we can, if you want to let us know, hey, we don't know where this is going to end up, you know, you don't have to open the claim completely, or we'll just open it up as a notice and close it if nothing happens. So, and that doesn't hurt you. That will not hurt you when you're as your loss ratio in the long run.
How prompt do you have to be? You know, say, you know, there was a claim, and so we're going to investigate what's the cost and weigh all that. And 6 months later, we decide.
Yep.
Okay.
It's better. So it's better to just let us know, because it will not hurt you. If you have a claim and then you tell us we paid, you can close it. Great. We'll close it. It's not going to affect you in the long run. So as soon as possible, because if it is something that we need to get an adjuster out there for, obviously it's better right as the claim happens for them to review. But yeah, so it's one of those things where it's like, let us know, it's not going to hurt you. Close it. And if you need it, you have it.
And law papers, if you ever get them, you have to let us know right away and manage it right away. Because those are time sensitive documents. So if you get law papers of someone suing the association, those have to be right away. And those are time sensitive. You can't hang on to it for a week till your next board meeting. You have to let your manager know and turn them in, because that's happened. So they are time sensitive.
If you don't give them to us and it's too long, you might not have coverage.
Yeah.
So yeah, rather just let us know, it won't hurt you than not.
Yes.
Hi, I have a question.
Yeah.
Hi, I'm Denise from Turtle Creek. We're site condos and we're fairly new, 2 years only, so new board members. And our question is, we're struggling with allowing our co-owners to have invisible fences. How are we opening up our risk to the association by allowing dogs to run on common elements, not on a leash?
That I would say, I honestly haven't run into that question before and how it would be affected, but I would say it's something that as a board, you guys can put in as a rule stating, you know, no invisible fences allowed. That's up to the
And
condo
what's the
association.
ordinance of your city? Do they allow those? Because you have to look at that, and I would talk to the attorney, because if they're allowed in your ordinance of your city to have invisible fences in subdivision for the dogs, okay? Or they have to be leashed or lead line. So I would check with you.
Yeah, how often do you see an association being sued from dog bites in condos?
Is it? I haven't seen, I don't know if I've
Not
seen that at
often.
all.
Yeah.
Not to say it doesn't happen. That's just been my experience.
Okay.
Yeah.
But that goes, again, that will go on the person that's the owner of the dog.
Right. Yeah, like we said, though, everybody will sue everybody, so I can see us getting dragged into it anyhow. So, you know.
Yep, spot on.
Yeah, that's
Okay.
true.
Thank you.
Well, to go back on the how long you wait kind of component, a good mentality is the entire purpose of the adjuster to come out and review a loss is to see what the extent of the damage. And if you've already repaired it and then file a claim, they can't come out and validate anything, right? And so a lot of times when it's questionable, I'll let the agents know, like, hey, we have a loss.
Yep.
I'm not filing a claim yet, but I'm making you aware of this situation. And, you know, so you're aware, and we've got some paper, you know, process started. And if it does turn in, we need to make a loss, then we've already got the ball rolling. But they're not necessarily filing that on their end yet.
Right.
Then you get the restoration people out there for the mitigation to see, okay, how bad is this, right? They can often tell you, okay, this is how big it's going to turn into, and you can make your assessment whether to file at that point in time or not. No physical repairs have been made, so an adjuster can still come out, see the scope of the damage, and work with you, you know, but once you've already started hanging drywall and painting, that ship's kind of sailed. And a lot of times those adjusters are gonna go,
Yeah.
Can't help. And then it's happened that like some air conditioning units happened before in one condo, and all of a sudden they repaired the drywall, they repaired everything, and then later they found out that it was leaking way inside the wall, which then caused more mold, which then they had to rip out, and then they had to rip up the unit up above too that was leaking, and that was, you know, a whole thing, and actually it caused problems of it being covered because they didn't want to, because it wasn't mitigated correctly in the first place, and you guys just let it go and didn't have the insurance adjuster out there, and they said, we don't know what it was before, this is old water, we don't know how long it happened.
What about the electric car chargers or even the e-bikes and electric bikes, the chargers? Is that something separate from the insurance, or would that be the co-ownership?
So we consider that, like, if they're gonna install like if you have an electric car and you're gonna install a charger in your garage, if that's even allowed, I would double check with your condo association first or the board, but that is considered a betterment and improvement, so it would be on the unit owner's policy to insure. Yep.
Matter of fact, DTE is even now that they're installing them themselves so that they have it, and then they charge. So there's, you know, a lot of other, you can check with DTE at those to install them, and if you decide for your community to have them, and then you can get a percentage of money on them too. So
Yeah, if the community has them, that's different. So if I have seen communities install them on and it's available for everybody, then that's on the associations.
Yeah.
So it just depends on who's
installing.
Yep.
And I don't want to turn it into a legal thing as well, but with EVs, make sure you're just not ignoring it. It's happening. People want to install EV chargers. As a board, don't ignore that and just say, we won't get that request. No one in our community will want one. Make sure you have a policy and have something in place that's very clearly outlined. And we've had, there's one association I can think of where someone installed it, it caught on fire, a whole building burns down. It was a $2 million claim. The association got their insurance canceled. They had to go into a high risk policy. It caused an assessment. It was catastrophe all the way around. But that association didn't have any type of policy dictating how, where, anything that they could do to install that EV charging station. So someone just did whatever they wanted, installed it, and it ended up burning down an entire building, displacing several co-owners, and then it did impact the association at that point.
So you have to find out what responsibility is when they're installed. Also, that they have their own chargers too. That's come up too. They get that they keep their own chargers with their cars. If you do a public one, that they have to have their own chargers. You don't provide the cable charge for them, because that's one responsibility.
We're looking at, how do we do that with the rules and regulations or whatever, updating that bylaw. But anyways, some people will have use an extension cord, like the chargers in the garage, but the car's outside. And is there can we have a restriction on that? We don't want,
talk to your attorney.
Yeah.
Yeah. Yep. Definitely an attorney question. Yeah. They are becoming way more popular. I've been getting questions about them way more than ever before. So I think it's only going to become more and more prevalent.
And just what I'm asking, based on these examples, say we did have a policy, but still someone's going to go out and do it on their own, or yes, somebody thinks he's the electrician, wire something himself, and we're not aware of that.
Right.
How are you going to react as an insurance company? Say, well, we have a policy, he didn't follow, we weren't aware of it.
If there's a claim,
There's
like if there's a claim, you mean, like if it causes a loss? Yeah, so
The $2 million
most likely what will happen is there'll be overlap between the association and the HO6 policy on what kind of coverages you need, depending on what is damaged. But usually a fire, it would be both. And the association carrier may go subrogate or go try to subrogate against the co-owner's policy to get that back because they were negligent. So those adjusters are gonna battle it out and
Find out who's responsible.
yeah,
Well, like in Lee's example, a $2 million
Yep.
claim,
Mhm.
a whole HO6 isn't gonna cover anywhere near that.
right.
I don't care what kind of riders they have, so I've been thinking. So I was just wondering, like, in that example, because, as a board member, we don't know what goes on in a lot of these units.
Yep.
And stuff, but-
And that's where it's important, the documentation aspect of that. If you have those policies, not only can the insurance subrogate against it, but then it gives you as an association more legal footing to go after that person with an attorney if you need to as well, to make up any difference.
So would we have to have our bylaws rewritten to have that included?
No, you can,
I should say.
no, for the most part, unless your bylaws explicitly say you can't have EV charging or you can't do X, Y, and Z, you can make a policy or a rule and reg that kind of guides that. It just can't contradict anything that's in your recorded governing documents.
Lee,
Okay.
wasn't there a session a couple months ago that you did on having the power?
EV?
Mhm.
Yeah.
There is, yeah,
The right word for it.
Yeah. You're hired, Kathy. So look at,
1 a year.
all of our seminars are always recorded. They're all on our website. Natalie's not here tonight, but our marketing person does a great job of throwing all the videos, blogs, different articles on our website. So it's a huge resource. There's videos for every topic. There's one specifically about EVs.
To have something in place that talks about energy
That
conservation, which would include the EV charging.
that does not include EVs. So it's about solar panels and different other forms of energy saving, but it is not EV. No.
Probably soon though. We'll
Yeah,
see what
probably.
happens with that.
Okay.
Yeah.
Thank you. Thank you, everyone.
I appreciate it.